Awesome. Thanks, Caitlin. Good morning, everyone. Hope everyone's having a good Thursday. Welcome to our webinar, Ohio Rate Changes Explained. So myself and Geoff Greenfield will be walking through those. So want to kick it off to start the morning with a little bit about Kokosing for those of you who might not be familiar with us. We are a family-owned company founded in 1951. So we are celebrating our 75th anniversary this year. So 75 years in construction and 25 plus years in solar, which is exciting and long historical time to be working in the industry. Our headquarters are in Central Ohio, up in Westerville, and we work throughout the Midwest and the Mid-Atlantic here in the US and are continuing to look at all opportunities. We are part of the renewable energies, industrial manufacturing, heavy civil, wastewater, water treatment, and transportation and marine. So we do a wide range of things throughout the industries within the construction industry. And we are rated 49th in the top 400 E&R contractors. So a little bit about myself now that we talked about Kokosing for a minute. I am our Director of Solar Operations here and oversee our solar group. I have been part of the solar team for 7 years. I also sit on the board of the Amicus Solar Cooperative, which is 80 plus member companies throughout the United States. My background is in business operations and human resources prior to joining the Kokosing Solar team. And my role here, as I said, I am oversee the entire solar group. So I'm responsible for our P&L. I mentor our teams and coordinate safety measures, make sure we have all the best practices and policies in place. And in the last year, as this solar market and incentives and everything have been ever evolving, I've been very involved within things that are happening in Washington, D.C. and new policy. And so staying up to date on all the policy and regulations to be able to support our team and our customers in the best way we can.
Thanks, Roberta. My name is Geoff Greenfield. Good afternoon, everybody, or I guess still it's morning in the East Coast. I am the Director of Solar Strategy here at Kokosing Solar. So I work with Roberta and the other leadership team members to keep track of policy as well as technology, project economics, and help our customers go solar effectively through our amazing team here. I've been doing solar for 25 years. My wife Michelle and I founded Third Sun Solar back in 2000 and grew that company to the point where we were acquired by Kokosing, as Roberta introed, a large, diversified, stable construction company that saw solar as an important emerging part of the energy market and decided that the best way to get into it was to work with Third Sun Solar. And it's been great. That acquisition was completed just about 4 years ago. And so Roberta and our other team members have come along. We've added many more team members. And then we leverage the existing capacity of Kokosing, the large company that stands behind us. I'm also the co-founder of Conductor Solar, which is a solar financing software platform. I'm a member and former board member of the Amicus Solar Cooperative. Roberta mentioned that. And then I'm also the vice chair on the board of the directors of NABCEP, North American Board of Certified Energy Practitioners. That's effectively an industry group focused on quality, certification, standards, et cetera, in North America and beyond. Next slide. Yeah, so today we're going to be focusing on Ohio. If you're in another state, we might be able to work with you, but just because it's such a big, huge topic, we couldn't talk about every state's energy policy. So we're talking about Ohio's energy landscape. We're going to talk about the rate increases that many of our customers are seeing, and also talk about solar as a hedge against that energy volatility and the economics of going solar. And this is all going to be compressed into, like Roberta said, about 40 minutes. So we do have time for Q&A. You should be able to submit your questions using the Q&A button down there. And then Caitlin will kind of combine some of the questions. A lot of times people ask the same question. And hopefully we'll have a good conversation about this today. All right, so we're going to jump in and talk about the Ohio energy landscape. Roberta.
Yeah, thanks, Jeff. So, I mean, we all see the news. We all, read the newspaper, check things online, and understand what's happening. And I think we all grab our smartphones or our laptops and start thinking about what's happening out there in the world. And I think we've probably all used ChatGPT a time or two or some kind of AI technology to help us in our work and our personal lives. And I think it's, the world is ever evolving. And as that happens, we all become larger electrical users, whether it's, AI data centers or robotics or more manufacturing coming to the US. Like all of those things are really driving the volatility in our energy market. And so you guys will see lots of headlines. I'm sure you all have, and we'll continue to see that with the market pressures as we move toward the future. So just a little cartoon for all of us. As mentioned, ChatGPT. I think I probably use it on a daily basis to look up a wide variety of things, personally and professionally. And so it's interesting to think about it from this perspective. ChatGPT, why is my electric bill so high? So as we kind of move forward, I think about that pressure as you're using ChatGPT. Pretty cool that everything seems to be a full circle evolution here.
So, the cartoon being a kind of cute way to say the answer. We've been seeing the headlines. Um, Along with conventional energy demand growing through more and more use of electricity, more and more EVs charging, more and more manufacturing coming online, the AI revolution is a big driver of the energy demand going up. At the same time, supply is being constricted. Want to shift the slide to the next slide? Yeah. So, I guess Roberta could handle this. Basically, a big part of the question is where our energy comes from. Um, in Ohio, it's a pretty good mix.
Yeah, right, Jeff. So we do have a good mix here in Ohio generated by source. And as you'll see on our charts that we have presented on the screen, there's, about 8% of renewables here in Ohio as part of our generation source compared to 46% for natural gas, 24% for coal, nuclear at 17, almost 18%, and then oil is a small portion. And so what makes up renewables is a variety of things. Sometimes folks might think renewable is just solar or just wind or a variety of things, but it's really a combination of things. And so it's solar, wind, biomass, and hydropower. And as you can see, solar is a small slice of that pie. And so it's interesting to look at it, how important all aspects of energy are to our future and how we can all work together to help lower the cost of energy as we continue to move forward, as those energy rates continue to rise. So I think it's important to think about this from a holistic approach. Like we all support each other, we're all helpful, and to make sure that we have enough generation available for all the consumers out there as we head into the future. As technology continues to grow, manufacturing continues to increase, all of those things happen. We're going to need everybody's going to need a slice of the pie here to make it viable and sustainable for our communities in the future.
Yeah. So your electric bill is primarily driven, not your residential electric bill, but your commercial electric bill is primarily driven by two main components. And you can see in the donut chart there on the left that there's the delivery charge. Sometimes people talk about that as T&D or transmission and distribution. And then there's the supplier charges. Sometimes people talk about that as the energy charge or KWH. So this is one of our typical customers. They're a small manufacturer. They're using, this month, 286,000 kilowatt hours. So 286.56 megawatt hours. So they're paying, $40,000 a month in their electric bill for at least for this month. That's an important part of their cost stack. And the decision makers at this company were watching that go up and they're shocked. They do 5-year planning and they were not ready for the rate increases. We get a lot of customers calling us about solar and we ask why. And they say, well, my bills are going up and I'm trying to figure out, what I can do about it. So digging in a little bit more detail on the $23,000, the larger component on this, the delivery charge, that's from American Electric Power. That's from your utility, and that's the charge for transmission and distribution. So in this case, it was about of their kilowatt hours, they paid about 8.2 cents per kilowatt hour for T&D. And that's largely driven by their peaks. How much power they're going to draw at any one time is usually how T&D is calculated. The other component is their energy charge, and that's per kWh, and that right on this customer is about 5.7 cents per kilowatt hour. That's usually negotiated with a private supplier, a competitive retail energy supplier in Ohio is what they call them. And a lot of times, industrial and commercial clients are able to negotiate maybe 2-year contracts. They used to be able to lock in a rate for maybe up to 4 years. That's harder and harder to do. So that part is volatile as well. Next slide. Yeah. So what's driving that increase in the T&D or the demand charges is the PJM. The PJM is our regional transmission organization. You can see on the chart on the right that along with Pennsylvania, West Virginia, parts of Virginia and the Mid-Atlantic, and then a little bit in Illinois and Indiana. This multi-state area of grid operators, the utility companies, sends energy across state lines, buys it, sells it. There's a power plant in Pennsylvania that puts power into the grid. Effectively, it all feeds Ohio. And then if there's a big demand in a storm or cold winter days in Maryland, we send energy that way. And so this transmission system has existed for quite a long time. There's other ones out west. And that's what sets the demand charges. Next slide. So on the left, you can see how this is from the EIA. So this is an aggregate of lots of different energy users. It's been climbing slightly, and this average shows as of 2024 that energy costs were just over 10 cents. In that customer demand profile that we showed a couple slides back, their blended energy cost was just under 14 cents. So you can see how this is a little bit out of date already. And then you can see on the right, the natural gas charges. And it jumps up and down. It's trended down since 2008. And it's, had a little peak in 2002. Right now, the kWh component of our energy, the smaller component for most of our customers, is follows natural gas. And it's, a little bit jumpy, but for the most part, stable. What's really changing is called out in the next slide. This shows that in the PJM, the pricing for the demand charges has really shot up. The PJM has a 3-year ahead pricing structure, and it's designed to send the market signals so that as demand rises, new plants will come online. And you can see that between 2024-25 to now 25-26, there's a huge jump. And that's the pain that people are feeling right now, and making our phone ring, and why we're having this conversation today. Um, so now we're going to talk a little bit about solar and how solar can help. I'm going to say it right now so we don't forget. We're going to be talking about some policy issues. We're going to be talking about tax credits. Um, we are a construction company. We are solar experts. We are not tax legal experts or accountants. So we always say this to all of our customers, all the people making decisions. Anything related to your tax credits or whether or not you can get a tax credit, what your specific impact will be on your specific use case should be, vetted by your professional advisor on that subject. We'll talk in general about tax credits as we understand them to the general market, but we're not giving anybody tax advice right now. Roberta?
Yeah, great segue, Geoff. Thanks. So I think as we jump in, like Geoff said, well, we do follow policy and everything. We are, our expertise is in the build and the constructability of the projects that we do. So let's talk a little bit about financial benefits. Everybody wants to know and make sure that the finances make sense as we're making large investments like this. And so we have an example here on the screen, a 30-year example of investing in solar. And so if you follow our charts along, you will see that an investment into a solar project here in the upfront payment being, $2 million. At year 9, you're going to break even here. You're going to have your simple payback. You're going to meet that. And so from that point forward, the whole point of having solar installed is really to levelize your energy cost. As we have all seen in our bills, residentially and commercially over the last several years, we've watched them kind of rise, and then we just aren't quite sure, like as we predict, like where that rise is going to go. And so with solar and able to control your energy costs, you're able to really kind of level that out and know what your levelized cost is going to be as you move forward with the solar investment. So the first 9 years of the system, obviously it's a payback period. We all invest in high dollar value items that are beneficial to our businesses, and they all have ROIs and things like that, attached to them. So solar is no different. This is investment in our future and locking in those energy rates. And so you'll see how if you don't actually do that investment, how much energy can rise. And so your savings potentially, depending on your business and your consumption, electricity, all of those types of things, in this particular example could have been, almost $4.4 million dollars in electric bill savings over that 30-year period. That's a lot of money that can be taken and invested into your company and other places. And so we want to show that for folks to be able to understand that like you can really levelize your cost of energy here over a 30-year period. I think we've all learned a lot of things in the last several years since COVID is like, moving this to almost a personal level here is like if you could have locked in your grocery bills back in 2020, we probably would have wanted to lock those in compared to where they are today. And so the same thing rings true for your electricity. And we don't all tend to think about it in that way, is like locking in these things are really beneficial to our future. And then just some incentives here. So this particular system has we quoted a 2.2 mil. I'm just going to round numbers off because it's a lot easier if folks don't want to hear the whole change scenario. But then federal 100% bonus depreciation, being able to take that up front, $375,000. This particular having a federal ITC credit, which is still available to folks in the commercial world under the tax code 48 for 895, almost 895,000. And then the state allows us to take a 10-year depreciation. And so that's around 44 to $45,000, which then makes your net cost of the system 921,000. So you can see how quickly the incentives, as we look at our customers, like what location they're in, domestic content, energy communities, what the states offer, federal tax credits, when projects are starting, all of those components. Every project is individualized and looked at for each customer because everyone is unique as we move forward, and we want to make sure we're bringing that customized approach to folks. So you might be wondering like what tax incentives are out there. We've all been watching the news for the last year. I mentioned earlier, we've been learning about policy a lot, read a lot of tax language and bills over the last year just to make sure that we're able to be informed. And again, not tax professionals, but part of our role is to make sure we understand it. And so right now in 26, there are still tax incentives that are available to our customers. There's the 30% base tax credit for customers as long as they, have the tax appetite and the ability to take that. And of course, you should consult your tax professional to see if you are eligible for that. And then if you are located in what's called an energy community, which you will find those, we will walk you through that process and help you understand like if you are not in an energy community. But for example, I'm in southeastern Ohio, and there are a lot of spaces in southeastern Ohio that are actually part of energy communities and allow for customers to take an extra 10% tax credit because of their energy community. And then there's Mark's depreciation that is still available. And so all of the strong post-tax credit economics are still within reach, like as the tax credits begin to filter out over the next couple of years, we'll continue to, prices of material will continue to shift and things. Energy costs will continue to rise. Everything will continue to make sense to invest and levelize, lock in your energy rates as we move forward. So there are some key tax deadlines, though, as we move forward. I think it's important for folks to know about these. At the end of 25, which seems like just yesterday, but somehow we're already in mid-March. There was the ability for folks to lock in 5% of their project costs if they were less than a megawatt and a half, and safe harbor under some tax guidelines that maybe didn't bring in things like FIAC compliance, foreign entity of control compliance, and things like that. And there's some new procurement rules that are coming into play, which we're all continuing to get educated on and learn about as these requirements continue to come out from the federal government, and not being able to use components from different countries. So talk about FIAC, so Russia, China, Iran, North Korea. All of those guidelines begin to come out. Last Thursday, they came out in the first iteration here for us to take a look at, and really some high level preliminary guidelines that help us be able to guide the products in the future. And so there's a second, just how at 1231, there was this like safe harbor period to essentially lock in from the new guidelines that were coming out on 1/1 around material. There's this second threshold on July 4th of 26 for folks to safe harbor projects. And that safe harbors those projects to allow for a longer installation time through 2028. Rather than having to be completed by 2027. And so if you want to have this longer runway, which sometimes on solar projects is critical as they go through interconnection and permitting and development and all of those types of things, you're going to want to safe harbor projects by that point. And you can do that a couple of ways. And it depends on the size of your system, really how you're going to lock those in. So system size is less than a megawatt and a half typically have a different safe harbor strategy than projects that are going to be larger than a megawatt and a half. You actually have to get construction physically started on those projects. And so we are in this critical period right now for those projects, getting those projects signed and started here in January and February is like the ideal timeline. It's still possible as you head into March and April, but it gets a lot more complex as you head into June to really get those things fired up. Because if it's a ground mount, you need to be driving a pile in the ground. And if it's a roof mount, you need to be starting certain parts of construction physically on site. And that comes with a lot of getting through permits and interconnection and making sure materials are available and just a lot of planning that has to happen. So we are closely monitoring that, working with all of our customers to make sure that we have strategies to work with them and their tax professionals on as we move through that process. And then if you don't safe harbor prior to that time, and you sign up for a construction project, on January 1st of 27, that project has to be completed by the end of that calendar year in order to still potentially have that ability to capture that tax credit. So it's an ever evolving world and it can get very confusing. And I know I just ran through that super quickly. So happy to answer more questions about that but there are some strong deadlines here as we move into the future. And even beyond tax credits, things are still going to be viable as we continue to see utility costs rise. So it's better to lock in now so that you can get in line. You might as well get a tax credit versus not being eligible for one. And the next important part is selecting a vendor. So kind of my segue into like getting started now and how critically important that is. Really, selecting a vendor is important. We talk to customers all the time, whether it's in our O&M division that have had projects installed by us or competitors. And so it's important that you're getting quality installations. And so some of the things that are important as you're looking for a provider, we have displayed here on the screen, and I'll walk through them in a little bit. We talked earlier, Geoff and I both talked about being on either currently on the Amicus Solar Cooperative Board or being past members of the cooperative board. And so Amicus really sets the standard for the future. Like there are a lot of companies out there like us who are, bringing heavy industry standards to make sure that customers are getting quality installations. And in addition to the cooperative, where it's a sharing of best practices and purchasing co-ops and things like that, there's also an O&M cooperative that we're part of. We have board certified folks. We have good BVB ratings. We've taken the solar ethics pledge, and everyone in our team, not just in solar, but everyone at Kokosing, we operate with leadership. We all are leaders in the industries that we are working in. And so as you all are looking for providers for the future, we would encourage you to look for contractors that are specialized in the areas. They also have general trades part of it. They are turnkey EPCs. They have strategies in place to work with each customer and understand everybody's unique situation, and whatever works for one customer might not work for another customer. Having solar engineering expertise, someone that's been in business for several years is critically important as you move forward. Past work experience, asking for references, getting references, talking to those references, making sure you understand like the components that those folks can bring to the project, their reputation, longevity, execution strategy. Like, do they self-perform that work or do they actually hire potentially 1099 subcontractors or just a contractor to come in? Are they more of a sales organization and less of a self-installer? What works for them and what doesn't in that aspect? I know for us, we're self-perform. We're 100% self-perform, full turnkey EPC. And so that brings us a lot of experience in the market. We have people who are over and over installing solar projects for several years. And then, making sure customers, well, we're not tax professionals, we do talk to them about the IRA compliances and requirements that are out there. There are certain ratios that you have to meet in order to support that tax credit and be able to actually capture it at the end of the day on your project size. So all of that's important. You want to find a contractor that can bring long-term experience, understands the current market, and then is able to execute on the installation and bring pride and really constructability, quality work to you. And then it's also important, I think, to think about it's awesome to get a system. It's like buying a new car. You get turned over your system. You can watch it on your monitoring platform. All of those things are exciting. But just like anything else, there is operations and maintenance that are required. I would love to tell you that, you can turn it on and you never need to maintain it, but you have to maintain everything in life. Like it's not like this isn't anything different. And so we also have on our team, and a lot of folks do, operations and maintenance teams to be able to service you after the fact. I think that's one of the most critically important things when you're buying anything is to understand what it's going to look like after the sale, after the installation, once you walk away, with the keys in your pocket. Like you want to be able to say if something happens or you have a question that there are people that you can reach out to. And that's really where the longevity and the reputation comes into play. Getting a partner who has this long history allows you to know that 5 years from now, if you're going to have an issue with your system, that there's going to be someone there to pick up the phone from your original installer to help you through that problem you have. And like kind of walking everyone through what a process looks like for you as you come on board. Like, number one, selecting the right partner, and you should talk to people, do your research, understand what your partners have to offer. This really is a partnership. It shouldn't be a hard sale. It shouldn't be a gotta buy now. Like this should be a let's collaboratively work together to develop this partnership and what's best for you and your business. So I think keep that in mind. And then work with, well, we do, and we expect that as you select a good partner, you're going to work with someone that's going to design that system that's customized for you. What works best for you? What's your electricity utility usage? What, where are we going to install the system? How old is your roof? Are we putting it on a ground mount? Like all of those complexities, just understanding the full scope of what makes the most sense for you and designing that system that makes the sense. So we get the system designed, and then everything has to go through permitting and interconnection. We need the utility to tell us we're going to be able to connect it to the grid, that you're going to be able to sell that power back if you're overproducing in a period of time. We also need to get your local AHJs and zonings to approve the work that's going to get done so that everything's getting tied in together. And it's like a very iterative step process to get to the completion here. And then ordering long lead gear equipment and materials for the projects. So some equipment is readily available and we can pick up the phone and get it here in a few days, and other equipment might take 52 weeks to actually produce at the manufacturer because there are delayed timelines in getting things out of manufacturers. And it's really important you have that system designed to understand what equipment you're actually going to need to order. Because if you're not ordering the correct equipment based upon your system design and your permitted and interconnection abilities, then you might have this added cost of buying equipment that's not needed. So it's critical that you're walking through the stages of the process so that you are getting exactly what you need. And then once all that equipment and the materials come in, getting out for the actual construction of it, getting the racking installed and the modules installed and your inverters and getting all the electrical connections complete. Doing inspections, so startup and commissioning is a really big part of every system. Having someone from the quality team of your EPC installer coming to make sure everything is been connected as it should be connected and that they're able to turn on the system and they commission it to make sure it's operating and there aren't any errors and that all wires are connected and wire management is complete and there's no safety concerns or anything is critically important. And then finalizing that with the utility. Once all of that has been done, getting the local AHJ inspections, all the inspections that need to happen to be able to say, okay, utility, we're ready to turn this on, and them actually switching out any meters or coming out and telling you that it's good to go. So it is a process, and a lot of times it depends on how long the process is, can depend on what utility jurisdiction you're in, what your jurisdiction is, the complexity of your project, what your timeline is, availability of material. And those are all things that your partner that you selected should sit down and walk through with you so you understand during that whole process where your project is, what's expected of you, what's expected of them, what the delivery timelines are, when you think your system's actually going to get turned on, and should have a schedule built out that they can walk through with you so you know what that looks like and there's no surprises. And there are other factors that come into play. Some customers run RFP processes as they're selecting their partners, and that's important because maybe they don't know all the partners that are potentially out there, and so they want to open this up for a process for folks to bid on the work, or some folks might just come directly to an EPC contractor and work directly with them and not actually do an RFP. And some folks might say, hey, this is an awesome investment. I really want to do this, but I don't necessarily have the cash that I need in order to lay that out in order to be able to get this project across the finish line. And so I might need a financing option. And so all things are possible on the table here. So I think if you're out there listening and you're like, man, I would really love to do this, but we don't have the cash, or I'm not sure if this is the right time, or I'm not sure if we're a good candidate, selecting a partner that's going to help walk you through that is important.
Roberta, do you need to take a breath? That was a whole lot of information there.
I
Uh,
know, sorry, kept going.
no, fine. Again, I think the expertise that you just got exposed to is is the key differentiator that company A versus company B. And our approach is a full service approach where we're going to help our customers understand their options, understand the decisions, understand the choices. We don't make any assumptions. We don't push anybody into a category or a box. It's really a customer first consultative approach where we apply all of our experience and we apply our team's knowledge to help the customer navigate a lot of these unknowns and make good decisions. So one of the important parts here is design. You can see here that there's some ground mounts. You can have rooftop mounted. Sometimes it's a hybrid ground mount and roof mount. Sometimes it's carports. So that's just a big part of what we do. We're a design build team. Go ahead and you rotate it. And then the other piece that Roberta called out is the capital expenditure. A lot of our manufacturing and larger commercial clients, they have multi-year capital plans. And if they want to invest, $1 million or $200,000 in a system, it has to be approved in Germany, and they can't just spend the money for something this year. And some of them decide that they actually would rather not spend the money. So there is a financing approach where some of our customers actually own the system and they have a cash-based purchase and they own it and they can hire out the operations and maintenance to us. Or some of our customers say, you know what, we want you to build, own, and operate the system, and we'll host it on our property. And then we'll pay for the energy over time through what's called a PPA or a power purchase agreement. So PPAs are a very different approach to owning, to accessing solar. You don't actually own the equipment, and you're basically you're sharing the upside with an investor. There's going to be a third party investor that's going to own and operate the solar array, and they're going to spend the money. They're going to take the tax credit, and they're going to make all this investment based on you promising to buy the energy from the array over the next 20, 25, 30 years. So it's a different approach. Oftentimes it's a $0 down approach. There's obviously the cost of the time involved and legal review of the agreements, et cetera. But effectively, some of our customers go solar for $0 down. The economics are quite different. The payback and the return on investment of owning the system are much higher. But there is a path to go solar for folks that have zero capital, but they are a stable business or a stable organization. And the investor will be able to make a good bet that they're going to be around to buy energy for the next 25 years. And so they can structure a deal that way. We've got partners that we do this with all the time. And it's one of the options that some of our customers look at. Next slide. All right. So we by no means have given you all the answers in this quick little overview. And in fact, we probably have given you so much information that your head might be spinning or you might be more confused now than when you started. That's fine. This is complex stuff. Um, and it's our job to help you understand what your options are. It's our job to answer your questions along the way. It's our job to connect you with our customers so you can find out how the system we installed 10 years ago is working, et cetera. Um, but the call to action is if you're feeling the pain of electric rate increases today and you're tracking how it's only going to get worse, take the first step and we will do a no cost initial consult with you. We typically will look at your electric usage patterns. We look at your properties, look at the roof, look at the ground mount, look at carports, look at multiple facilities. No two customers are the same. So we start by gathering information and understanding what our customers' needs are, what their goals are, what their questions are. And sometimes we can say, you know what, uh, it's not going to work. Sometimes we say because of the age of your roof, we don't recommend putting solar on it. Or you say that you're going to be in this building for only 5 years, but then you're going to outgrow it. Well, probably makes sense to wait and look at the next building. So that's one of the reasons we've been successful in the marketplace is that we take a consultative approach and we answer your questions. We do a very detailed economic analysis. We can discuss that with your CFO or your advisors or your accountants. We want to make sure that customers have all the information they need to take that next step and pull the trigger. Um, and that next step is coming up quickly. That's one of the things that's happening is that if you are eligible for the tax credit, there's some timelines that we need to start working with you soon on. So hopefully you're getting this information in time and you can give us a call and we'll give you the update and set up some time on your calendar to have one of our consultants answer your questions and move forward. Hopefully we've left some time for a Q&A. There's a button down at the bottom, Q&A, and you can submit your questions that way. Caitlin, do we have any questions teed up already?
Geoff, I think we have a couple of questions already. The first one is, what do you see as the typical payback period for commercial solar under today's rates?
Got it. Yeah. So we showed a 9 year simple payback on one of those. Um, the cost of solar can really vary. So that's one component. The cost of the energy rate that you're paying that solar is competing with, that's another component. Um, and every customer is different. I think our best payback within Ohio has been close to 7 years. And then some of our customers are still deciding to move forwards if it's a 12-year or 14-year simple payback. So it can really vary. But I'd say under 10 years is where most of our customers are hoping to see the numbers fall and move forwards.
Geoff, if I'm a customer out there, what type of facility do you think benefits most as I'm trying to figure out if my facility is best or not from solar?
Yeah, it's a good one. Roof mounted solar is very popular, but one of the first things that we'd want to look at is what is the age of the roof? No one wants to put, $100,000 worth of solar up on a roof, get the install all set, and then find out that in 3 years or 5 years, they're going to want to take that solar off to put a new roof on. So the age of the roof and the expected life expectancy of the remaining life of the roof is a big factor. The second piece is ground mounts. More and more of our customers are taking ground that effectively they're not using. They're mowing or it's adjacent to the facility and looking at what we can fit there. Sometimes we're putting solar on secondary ground that might be in a flood zone or might not be buildable for one reason or another. Um, so those are the two most popular places. Parking lots are an exciting, awesome place for solar. We've installed some really cool projects over parking lots. But as you can imagine, the additional costs for steel and the foundation work involved in making these larger structures raises the cost. For instance, one of our customers in the Cincinnati area uh, put about two megawatts or 2,000 kilowatts of solar up on their roof, and they put about 200 kW of solar on their parking lot. They wanted to make sure that they had some visibility. They wanted to brag about solar. They wanted their visitors and their employees and their customers to see solar, and it wasn't visible up on the roof, so it was a hybrid.
So Jeff,
I guess the
just about
that
anybody is
yeah.
eligible for
Well,
solar, right?
I'd say if you have electricity use and you want to reduce your electric bills, you're a good candidate. That said, larger projects typically have better economics. Sometimes if someone has a very small roof area or they want to do just a symbolic, small dip your toe in the water project, that's great. But the cost per install is tied to scale. So larger projects are usually better economics. And then your electric rate is pretty important. So if you're with a publicly regulated customer or a utility in Ohio, your rates are going up. But you might be on a smaller municipal utility. They might not even let you put very much solar on. You might be on a rural electric cooperative. They might have a tariff that doesn't reward solar very well. So that's one of the things that we do when we consult is we look at your electric rates, we understand the rules, we understand what the utilities require, and we can give you the quick answer of, hey, this makes sense to dig into further, or hey, doesn't look very good. Sorry about that, but that's where we're at.
And it looks like we have another question just to end. So, what funding model do you think looks best or works best for municipalities and public institutions?
Yeah, I should have mentioned that when we talked about the PPA. 2 years ago, 3 years ago, the primary way for nonprofits, universities and schools, municipalities and units of government, the primary way that they were going solar was through a PPA because they were not eligible to get that tax credit themselves. They didn't have a tax appetite. They didn't pay taxes. Um, that law changed, and the tax credit is now available to municipals and schools and nonprofits. Even though that they don't pay taxes, they can apply to receive effectively the tax credit as a payment, direct payment from the U.S. government. Even under the new administration, that rule hasn't changed, and so that's creating opportunities for these organizations to own the asset. And so it then comes down to pros and cons of third-party owned PPA versus direct ownership. Sometimes organizations just don't have the cash and they want to go with a PPA. Sometimes organizations have the cash or they can allocate cash in their budgeting plan. And so it's case by case. On the regular basis, we model it out multiple ways for our customers. So it's pretty easy for us with our modeling software to show option A, option B, option C, and then let our customers and the stakeholders that they work with evaluate those options. Great
Great,
question.
thanks, Jeff. Just a reminder, we have one more question in the chat, but if anyone else has questions, please be sure to drop them in the chat so we can make sure that we answer those questions for you. So, how vulnerable do you think Ohio is to price volatility compared to other states?
Wow. Well, I think we, along with Pennsylvania and all the other states in the PJM, are very vulnerable. The PJM decision makers, they're supposed to have these price auctions every year, and they didn't have those for several years. And that's why we had that big jump. And there's significant demand in the Northeast, in this multi-state PJM region, as data centers go up and up and up, and their demand goes up and up. So there's a lot of headlines, there's a lot of information out there, modeling prediction, but no one seems to be expecting it to go down. Um, it's a it's a it's a tough time to be modeling budgets, that's for sure.
For sure. Definitely volatile time in our utility costs. Any other questions we have out there? I think that ends all of the questions that we've had posted in our queue here, but want to give everybody a chance to ask a question if there are any more.
Yeah. Well, as we wait for any additional questions and wrap up, I'll just reiterate that um, we don't know whether or not solar is a good fit for you. We have to gather more information. We have to understand your goals and needs, your situation, and that's what we do all day, every day. We've got a team of solar consultants that do many, many models for customers, give them good, clear, honest information so that they can make decisions. And for the customers where it makes sense and the timing's right, we go out and build it. We build it with our own teams. We build it with super quality equipment that we procure at an advantaged price through the Amicus Cooperative. And then we're around to make sure that it stays running over the next 20, 25, 30 years because these are long-term assets.
Yeah, awesome. Thanks, Geoff. Well, thank you, everyone. It doesn't appear like we have any additional questions. We appreciate everyone attending the webinar today. Geoff and I's contact information is listed on the screen. We'll leave it there for just a couple of minutes if you need to capture that. We appreciate you joining us, and we look forward to talking to you in the future about what works best for you. Thanks again. Have a wonderful rest of your day.
Thanks, everybody.
Thanks, everyone.